Now for futures in focus, WTI in New York climbing above $50 a barrel for the first time since early August. Now this is the IEA and OPEC boosted demand forecasts, among other reasons. Joining us now from the CME to discuss is Bob Iaccino of Path Trading Partners. Does it stay above $50 a barrel, or is this a brief reprieve for the oil companies, Bob?
Well, wow, that's a pretty tough thing to say with crude oil, whether it stays above, but I think it sustains above, which actually is different. I think right now we're looking at a short-term target of about 53 on crude oil. The picture has completely changed, not just with the hurricanes, but with that IEA report, which is one of the most bullish ones when you read through the whole thing that I've seen in a while. Demand just continues to creep up and creep up and creep up. And what you saw in the EIA data was a slight dip in refinery runs and reduced reduced refined products. So when the refineries come back online, they're going to pump full out and not necessarily go into that slowdown during turnaround. So I think we're really getting some bullish momentum. This is the first time I've been this bullish in a while.
That's fascinating. And Bob, do you agree with the consumption forecasts? We know that forecasting is a dangerous game.
Yeah, but I do it all the time, right? Yeah, I do agree with it from a global perspective, as well as there's going to be unfortunate demand from the hurricanes as the rebuild continues, or rather gets started and then plays out. The rebuild is not going to be a one-month thing. It's going to be a year before they rebuild to the level they want to. That's going to cause demand through the winter, where we normally see, again, that lull here in the U.S. So I do agree, and I don't think, by the way, that that's in the IEA report. That's just global growth.
Bob, I want to ask you about cable and cable futures. How are CME traders taking this morning's BOE decision and the idea that maybe there's a hawkish tilt now?
Well, it certainly looks like they're trying to talk the pound up as opposed to actually move it up. The BOE's got a trouble that I know you guys have spoken quite a bit about, because their inflation is driven by weak currency, not by wage pressures. So they need to get that currency stabilized and running, and they're doing a good job of it right now. You're seeing it against the dollar. I actually think we get to 140 in cable U.S. dollar because the market believes the Bank of England has to do something. We don't necessarily believe that the U.S. Federal Reserve has to do anything. The CME Fed Watch tool finally has the December probability of a U.S. rate hike above 50%. Hasn't been there all week. Wasn't even above 40% earlier in the week. And nowhere out on the curve is it above 51% for any subsequent rate hikes. So the market believes the Bank of England, doesn't necessarily believe the U.S. Fed.